Low inventory, high demand, increased prices, and multiple offers. That is the current state of our housing market, guys. Today, we're going to give you a CNBC video reaction where we walk you through some of the questions that was raised in the video and just give you our perspective on it.
Welcome to our channel, Alliance Real Estate and Finance, where we bring you the latest discussions on the housing market, personal finance, and economic news. Be sure to subscribe to our channel, click on the bell so you will be notified every time we upload a new video, and give us your thoughts on today's video and what we talked about in the comments section below. We'd love to hear from you.
Well, Chef, they're worried that we're going to see the same thing we saw just over a decade ago when faulty subprime mortgages brought the housing market down. Some homes losing half their value. Just ask Google now. The search, when is the housing market going to crash, spiked 2,450% in the past month. Why is the market so hot? Searches doubled in just a week last week. And how much over asking price should I offer on a home 2021? That jumped 350%. That last search is the most telling of why the market may be in a bubble.
All right, let's break down the video. Will the housing market crash? Simple answer, no. But there's a couple of factors that are helping us today that we didn't face in 2008. I think a lot of people are expecting a crash similar to 2008, and that is not going to happen. So factor number one is that we're in a very low interest rate market, which is still driving up demand. And as those interest rates, even though we saw a spike go up a few weeks ago, they're starting to trend back down and even still at historical lows. So because of that, we still anticipate that the demand will continue to go up. Next thing is the improving job market. As you guys know, the more we get people vaccinated and back to work, we're going to have more incomes in people's pockets, and that will also drive more people into the housing market. Third item is creative financing. In 2008, we dealt with a lot of creative financing and a lot of adjustable rate mortgages. Today, it's very, very difficult to get a mortgage for those who have made it through and gotten their offers accepted. We are also not seeing a lot of adjustable rate mortgages. A lot of what's going through the process now is those fixed rate loans with strong down payments. So that being said, that's another factor that will continue to keep the housing market strong. Finally, appraisals. In 2008, we were seeing appraisers really rank up the appraisal values on homes. A lot of those appraisers have gone through a down market, and in today's market, they're being very cautious with how they appraise the value of these homes. Now, that being said, we're not saying that it's impossible to have a housing market crash, but it's unlikely that the housing market will crash as a result of housing related data or housing related economics. If we face an economic downturn in the market, something drastic that hits the job market, certainly we will have an impact to housing. But as it stands today, we anticipate the housing market will continue to stay strong as a result of the factors that we just went over.
I agree with you, Ian. If we do have some sort of an adjustment, it's not going to be anywhere near as bad as it was the last time. So why is the housing market so hot? Well, some of the things that you touched on are the same reason that the housing market's so hot. Money is cheap right now. We were talking about that earlier. These low interest rates are making money very cheap. People are able to afford a little bit more because of those lower interest rates. Another reason is the buyer pool, because of those low interest rates, is so big right now. There's so many people out there looking to purchase a house, especially after being cooped up for the last year during the pandemic. People are seeing that the houses that they're currently living in may not suit their needs for how life is going to be in the future, which is, you know, could potentially be a lot more people working from home. We've proven that they can do that now. And the low inventory. Inventory is just still at an all-time low. Construction costs have skyrocketed. So new construction starts are at an all-time low as well. So I think those factors are really pushing this market to be so hot.
And as we talk about low inventory, one of the things that I want to mention dealing with low inventory, obviously a lot of people are not putting their homes on the market. And there's a lot of speculation as to, why we're in a low inventory situation. One of the things that I believe people are not looking at as to why we have low inventory is, and I'm starting to see that as more and more people decide to upgrade their homes, they're not selling them. They're deciding to keep those homes and rent them out. So we're seeing a lot of those mom and pop landlords, come up through the ranks and keep their homes while they move into higher homes. The other thing that you mentioned about the new construction or new home builds, and I think you and I talked about this not too long ago. I'm not seeing a lot of homes being constructed at that entry level point. We're seeing a lot of the luxury level homes built, and that's probably as a result of the lumber cost and the cost of building these homes today. Let's touch on the final item. How much over asking should I offer? And Brian, I'm gonna give my 2 cents on this one, let you chime in, but I want to be cautious because I deal with a lot of calls from friends, from others that really talk about how much over asking. And in this market where there's so many offers and bidding wars, I always caution, your goal is not to win a bidding war, but to win a house that is affordable and suits your family needs. So advice is always offer what suits your family's financial position and that you can afford on a monthly basis. Don't go out just trying to win a bidding war with several other buyers on the market.
That's right. People have to try to be patient and not be emotional when they're involved in these offer bidding wars. Like you mentioned, affordability. You have to be able to afford the home. You don't want to get into a situation where it's hard for you to make your payments. And the other thing is you have to think about how much over list price you're going to spend. Are you going to make that money back when you go to sell? Is the market going to ever come up to the level above list price that you are going to be spending? Of course, over time, real estate is a long-term investment. Over time, the values are going to increase, but at such a sharp, we've seen and heard stories of people offering 100,000 or more over list price. How long is it going to take the values to really come up and be at that level? So you have to be careful.
And let's talk a little more about how much should I offer, because I think that's what a lot of the market and a lot of people are facing today, right? And this morning when you called me, I was on our case studies call, where we've seen a lot of people come in with those escalated offers, and then after the contract gets ratified and they've had time to go to sleep and wake up in the morning, then obviously now they have some level of regret and they want to figure out ways to reduce that price, right? So it is important to really go in, not to win the bidding war, but to win the house that is affordable to you and that you're happy with the price point that you've gotten. And Brian, I'll let you go a little bit into what's happening as these buyers are bidding up these prices way over asking, and how that affects when the appraisal comes in. What are we seeing on the market with appraisal values, listing price, and where our buyers are kind of falling in between?
Yeah, so once the contract's ratified and these offers that are being accepted well above list price, some buyers are guaranteeing any appraisal deficit. So if the appraisal doesn't come in, their loan is still going to be, if they're financing the purchase, their loan is still going to be based on the lower of the two values. It's either what the appraisal is or the contract price, whichever is lower. And the appraisers are taking a careful stance these days. They are considering the increasing market, but they can't just accept any contract price and make that the market value. There has to be substantiated value through the comps and the value in the property. One of the appraisers in an area where I live said that about a fourth of all the appraisals he's doing are coming in low. And the buyers in some cases are guaranteeing that deficit, which when they do that, they're coming to the table with more money. And that is establishing a new market value in a neighborhood based on them bringing the additional money to the table. So that's increasing the value in that way.
Yeah, great point. And I think these are some of the things that as the buyers and as we saw through the Google search and what people are looking for today, they have to keep in mind. One thing that I do want to mention as we talk about the Google search results that we just discussed is there's a lot of buyers that are currently waiting on the fence because they believe the housing market is going to crash. And so they're keeping their cash. Let's talk about what would be your advice to that type of buyer.
Yeah, so the people that are sitting on the fence, it's a catch-22. They might be waiting for prices to stabilize or come down, but at the cost of most likely a rising interest rate. So typically when the housing market cools off a little bit, the interest rates are going to end up going up, and then that's going to reduce their purchasing power.
It's good for buyers today. If you're looking and you really have a need for housing for your family needs, advice is get into the market, look for a house that's suitable to you and your family that you can afford within your financial structure. However, if you are in the market and you simply want a house, but you can afford to wait 1 or 2 years and you don't mind that, then I would say go ahead and take that risk and wait 1 to 2 years to see where the housing market is. But always keep your eye on the market and see, what's happening. We put out videos all the time to give you the latest updates on the housing market, and that should help you gauge, should I jump into the market right now?
Everybody subscribe to the channel and give us your comments below.